Hello everybody else. Today's discussion is about the assignment part one, what we did in the past, and how we come up. And as of the professor's notes, we just learned how to do this. Let's begin with the company name that we chose. It's Apple. So Apple Incorporation stands out as an ideal subject for a managerial economics case study because it exemplifies how a firm can leverage innovation, scale, and strategic positioning to shape and often redefine entire markets. Unlike most competitors, like Apple controls both hardware and software, creating an ecosystem that locks and customers and raises switching costs. So moreover, Apple blend of major products like iMacs, MacBooks, iPads with rapidly growing services like App Stores, Apple Music, iCloud, and most of the things illustrates a successful shift from reliance on one-time hardware sales toward recurring. So to sharpen the comparison, we will briefly contrast Apple's approach with Samsung Electronics, and my teammate will continue that later on. So it closes the global rival, whereas Samsung competitors across every price tier and relies on component sales to third parties like OEMs. Apple focuses on premium segments, commanding roughly 20% of global smartphone volume, but capturing over 45% of industry revenue. So, about the industry context, Apple operates at the intersection of three closely related industries. The first one is consumer electronics, hardware, smartphones. The iPhone is Apple's flagship devices, representing of over half of total revenue. And tablets and wearables, iPads and Apple Watch round out a suite of high quality devices. The second industry is about software and OS operating system. iOS, as we know, Mac OS, Watch OS, tvOS, proprietary platforms that ensure seamless integration and security. App Store ecosystems, a marketplace for third-party apps generating transactions, fees, and developer lock-in. The final, but least but not least, the industry-related industry is about digital services. Subscriptions, Apple Music, Apple TV, Apple Arcadia, Apple News, whatever the Apple presents, and the cloud and financial services. So as we know, the Apple has iCloud storage where we can save our data, and Apple Pay that we are using every day, and Apple Cards, not everybody can access on it. So those industries share high fixed costs, like a software development, manufacturing setups, but low marginal costs for software and digital services, creating attractive scalability. About if you're talking about the Apple company size and scope, as of mid of 2025, Apple scales is unparalleled. Like a market capitalized exceeds over $3 trillion, making it the world's most valuable publicly traded company. So employees, roughly about 164,000 full-time staff, spanning hardware engineering to retail and service. Retail footprint over 530 Apple stores in 25 countries. It's way too much. Offering direct sales and support. Annual revenue. As of the fiscal year 2024, we can see $391 billion, up from $383 billion to compare in back to 2023. Revenues. iPhone covers about 52%, services 25%, wearables and home accessories 10%, Macs 8%, iPads 5%. This breeds across geographics, product lines, and business models, gives Apple both risk diversification and cross-selling opportunities. Just an example, an iPad buyer like us who subscribes to Apple Music and purchase iPads to contribute more lifetime value than one of hardware sales. So it was about the brief introduction about what we did in our assignment part one, and my teammate Paolo will continue. Thank you for having me.
Okay. For now, on my end, I would be discussing about Apple's strategic priorities and competitive edge. Let's talk about how Apple aligns its mission to bring the best user experience through innovative hardware, software, and services with its business strategy. Well, first, it's going to be through sustaining innovation leadership. Apple is heavily invested in research and development, spending over 30 billion annually. The key areas include custom silicon, like the M series chips, AI, and augmented reality. These R&D spending supports its annual product refresh cycles, such as new iPhone models, which keep consumers engaged and reinforce Apple's reputation for cutting-edge innovation. About the growing high-margin services, Apple has rapidly scaled its service segment, which accounts for a quarter of its total revenue and carries gross margins above 60%. Services like Apple Music, iCloud, and Apple Pay are bundled via Apple One, creating a strong lock-in effect and boosting recurring revenue, an important pillar for long-term growth beyond hardware sales. Also, enhancing operational efficiency. Apple continues to refine its cost structure through vertical integration and supply chain diversification. By designing its own chips and owning retail channels, it reduces reliance on third parties while expanding manufacturing to India and Vietnam, mitigates geopolitical risk, and improves supply chain resilience. While advancing environmental and social responsibility, Apple has committed to being carbon neutral across the entire value chain by 2030. This would include ethical sourcing and enforcing labor standards among suppliers. This initi- this initiative not only supports sustainability, but also strengthens brand equity with increasing environmental conscious consumers. Let's get to comparative edge between Apple versus Samsung. Here, when we compare Apple to Samsung, key strategic differences would be clear regarding market focus. Apple targets premium segments, the average with an average iPhone selling for around 900, while Samsung, by contrast, covers the full price spectrum, which gives it volume the lower but the cost of lower margins. Through vertical integration, Apple tightly controls its ecosystem, hardware, software, and services, which leads to higher product cohesion and better user experience, while Samsung relies more on third-party platforms like Android. Through financial metrics, Apple's gross margins are around 46% with net margins uh, of 24% compared to Samsung's 35 gross and 10% net. This highlights Apple's strength in monetizing its premium strategy. Brand loyalty. Apple consumers are 90% retention, far surpassing Samsung's 70% in the high-end segment, showing just how sticky the Apple ecosystem really is. And both of them would be targeting environmental eco-friendly targets. So to conclude my part, Apple strategy is a textbook case focused differentiation, prioritizing quality ecosystem control and service monetization over the market share. It's a high margin, high loyalty model built on tight integration, continuous innovation, and sustainability leadership. The factors give Apple a strong competitive moat, especially in increasingly commoditized tech market. And that would be all, and it would be continued by Miss Faye Torreja.
Yeah, hello. For my part, let's talk about the economic decision making and strategic recommendation. So first is the internal economic factors for premium pricing and profitability. So Apple consistently positions its products at the top end of the market. Premium pricing both signals superior quality and sustains high profit margins. For example, in fiscal year like 2023, the company reported a 44% gross margin, well above the industry average of approximately 30%. By charging more than competitors, Apple captures value from customers who prioritize reliability and ecosystem integration. Apple's price scamming strategy further maximizes revenue. At launch, the newest iPhone models carry the highest price that early adopters will pay. Later, Apple reduces prices or promotes previous generation devices to more price sensitive segments. This two-tiered approach enables Apple to extract consumer surplus across the life cycle of each product. And in contrast, Samsung offers a full spectrum of devices at varying price points. Flagship models start around 1,000 US dollars, while budget variants can cost less than $300. Apple, however, maintains fewer but higher price SKUs, reinforcing its brand exclusivity. This focus on premium segments explains why, despite selling fewer units, Apple captures over 45% of the total industry profit. Next is about bundling and ecosystem marketing. Beyond hardware, Apple leverages service bundles, namely Apple One, to encourage multi-product subscriptions at a slight discount. Subscription services such as Apple Music, iCloud, and Apple TV Plus can collectively yield a gross margin about 71% compared to 37% for hardware. By integrating these services into a single package, Apple increases customer lock-in and lifetime value. And some research shows that users on bundled plan exhibit 15% higher retention rates than those subscribing individually. This synergy between devices and services builds switching costs. Abandoning Apple means losing purchase apps, save data, and seamless cross-device functionality. And as a result, Apple's retention rate for iPhone users exceeds 92% compared to roughly 75% for Android OEMs. For opportunity cost and resource allocation, opportunity cost influences Apple's choices around product scope. The company consciously avoids ultra-low cost smartphones despite potential volume gains in emerging markets. CEO Tim Cook remarked, "Our goal is never to chase unit share at the expense of user experience. By foregoing cheaper devices, Apple preserves its premium image and margins. The estimated opportunity cost loss share in segments priced below $300 is offset by higher profitability per unit. Similarly, Apple's in-house development of M-series silicon demonstrates a deliberate trade-off. By investing over 5 US dollar billion into chip design starting in 2020, Apple forwent purchasing Intel or Qualcomm parts. And this decision yielded superior performance per watt and enabled tighter integration across devices. And for cost estimation and economics of scale, rigorous cost estimation underpins Apple's product strategy. Engineers calculate the bill of materials, assembly, testing, and distribution costs before approving each launch. If projected unit costs threaten margins, targets, designs are revised, or projects delayed. This discipline helped Apple maintain 40% average gross margin on the Watch Series 8 despite incorporating new sensors. Apple's scale amplifies this savings. Quarterly item production exceeding 70 million units allows bulk component purchases at 10 to 15% discounts relative to smaller competitors. And over time, learning curve effects further lower cost per unit. In 2015, an iPhone 6s Plus teardown estimated a BOM of $236, And by 2024, the BOM for a comparably equipped iPhone 14 Pro had not risen pro- proportionately to retail price, enhancing margins. And Apple also strategically diversifies manufacturing locations to optimize cost. In 2022, the company began assembling 10% for iPhones in India. Additional labor cost savings estimated at $5 to $10 per device once fully scaled.
Okay, thank you, Faye. So I'll continue with the external economic factors. Let's start with impact of microeconomic indicators. Global economic trends directly offer consumer demand for premium electronics. When GDP growth accelerates, discretionary spending rises. Conversely, during recessions, luxury purchases decline. After the 2020 COVID 19 downturn, Apple saw a 0.6% drop in unit shipments but recovered swiftly as economies reopened. Inflation pressures increased input costs. In 2023, global inflation averaged 6%, prompting central banks to hike interest rates. Apple responded by issuing $5 billion in long term bonds at fixed rates of 3.7%, locking in financing costs before further rate increases. These proceeds funded share repurchases without raising product prices immediately, thus preserving demand. Rising unemployment reduces demand for non essential goods. During the US jobless surged to 8% in 2020, iPhone sales dipped by 9%. However, Apple's diversified revenue from services softened the impact. Services revenue grew 11% YOY that year, offsetting hardware weakness. Next is trade policies and geopolitical risk. With over 50% of Apple's revenue from Greater China, US China tensions pose significant risks. Tariffs enacted in 2019 to 2020 added up to 15% of some components. Apple mitigated this by restructuring supplier contracts and increasingly assembly in non Chinese locations, reducing tariff exposure by 30% by mid 2023. Currency fluctuations also impact earnings. In fiscal year 2024, a 1% strengthening of the US dollar reduced reported revenue by approximately $1 billion. Apple employs forward contracts covering 80% of anticipated currency flows to hedge against such volatility. Next would be environmental and regulatory pressures. ESG considerations influence both costs and brand perception. Under its 2030 carbon neutral pledge, Apple invested $770 million in renewable energy projects during 2023. These initiatives raised operating expenses by 0.5%, but improved investor sentiment and lowered cost of capital by 20 basis points. Antitrust scrutiny of the App Store could force fee reductions. A proposed 3% cut in commission rates would lower services segment margin by 150 basis points, shaving an estimated $2.4 billion from annual profit. In response, Apple has introduced alternative payment pathways in select markets to comply with regulations with preserving revenue. Next would be discussed by my teammate Nargis. Thank you.
Hello everyone. So today I'm going to be explaining the part risk return analysis. So let us start with the point framework and major risk. So the risk return trade-off implies that the higher potential returns come with a greater uncertainty. For Apple, key risks include supply chain disruptions, geopolitical tensions, technological obsolescence, currency volatility, and the regulatory challenges. So let us divide it into the 3 points. So first is the risk category, second is a potential impact, and third would be mitigation. So the first point we are going to be covering is supply chain disruption. Then the potential impact it would be having would be delay product launches, 5 to 7% quarterly revenue loss. Then the mitigation would be geographic diversification, buffer inventory. The next point is geopolitical. The potential impact would be tariff increases 2 to 3% margin erosion. Then the mitigation would be non-China assembly, dynamic pricing. Then the third risk category would be currency volatility. Potential impact would be FX translation losses, USD 1 billion per percent USD appreciation. Then the next would be mitigation, that is 80% hedge forward positions. Next point is the regulatory changes. Then the potential impact would be App Store fee cuts, that is USD 2.4 billion annual product reduction. Mitigation would be alternative payment compliance. Then the next point is technological obsolescence. Potential impact would be market share loss to faster innovators. Then mitigation would be R&D investment, product refresh cycle. Major risks, impact and mitigation strategies for the Apple. Then the return profile would be, despite of the high risk, Apple return profile remains strong. From 2019 to 2023, average annual return on investment capital, that is ROIC, exceeded 30% compared to the 15% industry average. Share repurchases and dividends returns USD 95 billion to investor in FY 2023, underpinning total shareholder return of 70% over 5 years. The next point is strategic recommendation. So the first point under the strategic recommendation is formalize opportunity cost analysis. So the recommendation would be require every major capital allocation proposal to include a quantify opportunity cost section comparing the returns from the alternate uses of funds. Rationale would be embedding formal comparisons will guard against sunk cost bias and ensure resources target the highest value project. For instance, evaluating AR VR headset investment against further AI services development could reveal superior ROI in subscription growth. Then the potential risk would be overemphasis on short term returns may underfund long horizons innovations. The next point is introduce region specific mid range devices. The recommendations would be launch lower price iPhone SE variants for markets like India and the South Asia. Rationale would be affordable models would capture price sensitive segments, increasing unit volume by an estimated 10 million units and boosting the services subscription by 5% based on IDC forecast. Potential risk would be brand dilution if pricing erodes premium image, meditate the limited feature sets, and 1 second. Okay, so the next point, let me see. Yeah. So the next point is enhance cost estimation via analysis. So the recommendation would be deploy machine learning models to refine cost forecast in real time, flagging BOM components with the highest price volatility. Rationale would be AI driven insights can identify cost reduction opportunities worth USD 200 million annually through supplier renegotiation. Sorry, reno, renegotiation. Okay, renunciations. Potential risk would be initial implementation cost and data integration challenges addressed by piloting in one product line before full rollout. The further point would be explaining by my colleague Maurice. Thank you.
Hi, good evening, everyone. Point three. So, as part of our analysis of Apple's business strategy, we explored several ways the company can improve its operations and stay competitive in a rapidly changing global market. Number three is the I have two more recommendations and our thoughts on how they could impact Apple's future. So number four is expand supply chain resilience. So it's making the supply chain stronger. So recommendation would be Apple should produce more products outside of China, aiming to increase production in India and Vietnam to 35% by 2027. Why this helps? Relying too much on one country can be risky, especially when facing supply chain issues. Studies from Harvard Business Review on 2023 show that having a more diverse supply chain can help Apple deliver products 20% faster during times of disruptions. So the risk to consider would be moving production to new countries can be expensive at first. However, Apple can manage these costs by signing bulk contracts and expanding gradually instead of all at once. So point number five, just 1 minute. Strengthen ESG integration and communication. So, improving ESG, that means environmental social governance efforts. So, the recommendation would be Apple should create easy to read ESG dashboards every quarter and connect executive bonuses to sustainability performance. So, why this helps? Being more transparent and accountable about ESG goals can help Apple build stronger trust with environmentally conscious consumers and investors. Yeah, so this strategy could even lower Apple's cost of equity by 15%. The conclusion, so by refining opportunity cost analysis, tailoring mid-range offerings, enhancing cost estimation, and bolstering supply chain and ESG strategies, Apple can sustain its premium positioning while capturing new growth opportunities. These recommendations balance profitability with resilience, ensuring long-term shareholder value and strategic agility. So that's it from my side. Hello, guys. I'm done.
Hello. Yeah, I think that's probably
Alrighty,
Yes.
thank you
yeah.
guys.
That's it.
So
Thank you,
we are
everyone.
2 more minutes.
Mm-hmm. So
So
okay, then so we can discuss about it.
Yeah, I think for so far, what we need to, what you call that? Like include on the next assignment that we would be submitting is the notes of Professor Sherm.
Yes. Well, thank you for all your input. So, we will just prepare the assignment week 6. So, from what we did from assignment 1 and 2, we'll base our amendments or the changes to based from what the professor provided in the feedback. So we will just apply that to assignment 1 and 2, and then we'll combine them, and then we'll add the additional topics that he sent us for um, week 6, and then we will
Yes.
just submit everything all together.
Yeah, I think that would probably.
So
yeah, we just
Anyone else would like to
conclude.
add something?
We just conclude what we had done in the past,
mhm,
like assignment part one and assignment part two. The company that we chose, it was about the
mhm,
Apple Incorporation, and we did our best to focus on deeply to the company, its economic, its growth, its
mhm,
margin, profits, some gadgets, and as a team, um, we are again keep an eye about the company's future perspective and how the
Mhm.
company is growing and how
May
company is
ano,
learning from the past. And what else? So,
I think that will be it. So for the week six assignment for the final draft, we'll
mm,
just we'll combine one and two, add the whatever comments from the professor, and then
preferably.
we'll add additional analysis plus the preliminary conclusion, and then we'll submit based on the requirements set by the professor, and then I think we're all good to go. And then we just have to prepare for the next presentation. I think
Presentation.
for the final, yeah, for the final presentation for our company.
Pen paper. Yeah.
alrighty, guys, then I'm gonna upload this today's
Yes,
recording
sir.
to the iCloud, and we'll share with
Mm-hmm.
you shortly. So
Yeah.
let's see if there we have a viewers on my iCloud or on the social media. Let's see what's gonna be the commands. And I would say please like the video and subscribe if you have
Please
any
like,
kind
Subscribe. All
share,
of
right.
subscribe.
if you have any kind of comments or sharings or
Any suggestions?
ideas, please don't hesitate to share us.
Comment
And
down below.
yes, and it's like social media's algorithms. To your like and comments will help us to improve widely to reach out more to the public because we are not just a play in, we are not just the regular students. We did something like an amazing job as a team.
Yeah. We'll be content creators now.
All right.
Then what else, guys? I do believe we have reached the time limits. Any
Yeah,
Yeah, I
I
think
think that's
any
that would
it.
go.
So
recommendations?
yeah, uh, I think we're all good because we already submitted TQ5, and then this will be for PCPN5.
Mm,
Attendance will also be submitted today
Mhm.
for everyone, and then we'll just have to prepare for the next week's submission.
yes.
Alrighty, guys. Then let
That's
me
pretty much
upload
it.
to the social media on my platform, and I'm gonna name it under the PCPN, PCPN5.
Five.
So hope you're gonna
Yes.
share with your relatives as well, and I know you're gonna force them to positively comment. All right.
All right.
Thank you
Okay, thank you so much,
guys.
Thanks,
Good
Ali.
night.
guys.
Thank you so much, everyone.
Have a great
Thank
night.
you,
Have a great
guys.
weekend. Happy Friday, guys. Take care.
See you.
See
Bye.
you. Bye bye, guys.